Talk to me about the CIB business. Anna. Are you pleased with the performance here? Is this good enough?
Yeah, you know, the profits before tax for our corporate and investment bank were up 49% year over year. But also very importantly is the return on tangible equity in our corporate and investment bank was roughly 13%, well above our cost of capital. So one of the most profitable quarters we've had in corporate and investment banking, obviously pleased with those results.
Jess, a very good morning to you. It's Manus in Dubai. You remain on your intention to pay the dividend. That's going to be a relief to the shareholders. The kind of language we're hearing from your peer group, Deutsche Bank over there, is there's not a moment to lose for them. There's a timeliness in terms of adjusting the business. Do you feel that sense of urgency, Jess, when you look around the business, or how do you feel in terms of the achievement of change thus far in the business?
You know, we've felt a sense of urgency for the last 2 years, and I think the milestone was closing the non-core bank of Barclays in June of last year, where we reduced the risk-weighted assets, mostly in the investment bank, by some £95 billion. But the restructuring of Barclays is over. The next big hurdle for us, which we completed really in the first quarter, was putting the historical legacy and conduct issues and litigation issues behind us. I think it was a very important milestone that we settled with the Department of Justice with respect to mortgage-backed securities. So the historical legacy issues around LIBOR and foreign exchange and commodities and residential mortgages, we've now pretty much have that all behind us. So now we can focus on generating excess returns and delivering those excess returns to our shareholders. And part of that was doubling the dividend for 2018.
Jez, you say that restructuring at Barclays is over. Is that a view that is shared by all of your shareholders? We now know that, of course, the activist investor Edward Branson has a stake in Barclays. Do you know what he wants?
No, I haven't heard yet what Mr. Branson wants. We have a meeting coming up shortly, but you know, I think our shareholders like the fact that we've completed the restructuring of the bank. We are strategically where we want to be now, with the sale of the control of our position in Africa being a major strategic move. I think doubling the dividend is a very good sign that we are on our pathway to returning excess capital to our shareholders, and then producing one of the most profitable quarters in the history of the bank in the first quarter, generating a double-digit return on tangible equity for the group overall, well above our cost of capital. I think that's a sign that we are past the restructuring and back to a more normalized business operating environment for Barclays.
Jess, look, the whole world's going to wait and see what comes out of those conversations and what news we can break around that. We caught up with one of your former board members yesterday, Sir Mycraic, and he said, in my experience, it's probably good to listen to activists because they sometimes have a point. Jess Staley, what is your red line as you go into that meeting with this activist investor? What are you prepared to say? Look, I am not prepared to countenance any divorce or hiving off of the investment bank. Is that your red line, defending the IB?
You know, we do engage with all of our major shareholders, and we look forward to engaging with Sherborne, and we appreciate the interest and the investment in Barclays. We have a strategy for the bank that we've outlined in March of 2016. We think it's executing quite well. We think the profitability this quarter underlines that. You know, all of our major businesses, whether it's consumer, credit card, the private bank, the corporate bank, or the investment bank, they all generated double-digit returns in the first quarter. So, you know, I think the numbers speak for themselves, but we always will engage with our major shareholders, and we look forward to a robust conversation with Sherborne.
You look forward to that conversation. Tell me if you've got any dates in mind for that conversation, Jez, but you can also go on to answer a question around returning increasing amounts of capital. You mentioned that this morning. Has your thinking on that evolved since last quarter, or is it much the same?
No, it's much the same. You know, what we said last quarter was, one, we wanted a double dividend, which we will do in 2018. We also said but we have to get the main conduct and litigation issues behind us. And everyone knew that the main litigation issue that we had was the Department of Justice around mortgage-backed securities that were sold in 2005 and 2007. That was settled. We settled for $1.4 billion pounds, which is roughly in line proportionally with how the U.S. bank settled, which is what we were seeking to do. So now that the Department of Justice issue is behind us, and also we took a reserve for PPI, so we think PPI is pretty much behind us now. We can be focused on generating double-digit returns, and over time, for the first time in 20 years, begin to consider returning capital to shareholders through things like stock buybacks.
Stock buybacks, that's certainly going to tempt the investor. But before I move on, do you think you could be a stock buyback before the end of the year, Jess?
We're not going to give a date to that. You know, we obviously have the stress test with the Bank of England to go through. There are some things we want to do with our balance sheet, such as deal with some of the legacy preferred issues that were issued during the height of the financial crisis that carry a very high interest rates that we are able to call. So there's some balance sheet issues that we want to do, but at the right time, we will look at beginning to return excess capital to our shareholders through buybacks. But we're not going to put any sort of time frame on that yet.
Jess, as you said, you seem to have turned the corner. You're coming out the other side. I love a little bit of a conversation about VAR. It puts other people to sleep. But UBS, the trading side of their business, they tripled their VAR, variance at risk. How much more extra risk have you taken, Jess? Have you upped the VAR limits for you? Anything like that? Anything like tripling the risk at the equities unit that you saw at UBS?
No, you know, so our markets revenue, you know, macro, credit, and equities, were up in dollar terms 21% in the first quarter. That's more than double the average of the U.S. investment banks and quite a bit more than what the Eurobank banks saw. So we clearly gained market share in the markets business. In all of those businesses, we're returning, we're generating returns above the cost of capital. And we did it not really by increasing our risk. In fact, we haven't increased the risk-weighted assets in the corporate and the investment bank at all. We've reallocated risk, but haven't increased it. It's much more by the degree of our client flows. We have a new management team that's been working now for about 9 months, and they're doing a great job. We've invested quite a bit in technology. That's having quite a big impact in the flow. So it's much more the volume of activity that's going through our desks as opposed to any market increase in VAR, as you call it.
Can I ask you a little bit? I know that you're very focused on your results today, Jez, which of course is understandable. We've heard from Deutsche Bank a big review of their business going on at the moment. If we see Deutsche Bank retrenching, does that, in certain parts transatlantically, in certain parts of the US business, does that provide an opportunity for Barclays at all?
You know, we're going to stay focused on the strategy we outlined in March 2016 to be a transatlantic consumer and wholesale bank. The consumer business is critically important to us. What we're doing with card in the U.S. and the consumer bank here in the U.K., what we're doing with digitization, et cetera. But the wholesale business is very important for us. It's very profitable in the first quarter. And we just want to stay focused on our customers and clients, and we're comfortable with the strategy that the bank has today.
Jess, Anna and I have been talking about 2% rates, 3% rates, dislocation for equity markets. You're the CEO of a pretty major bank. Give us your take, please. How much time do you spend on your Bloomberg looking at 1-year money in the US, 2-year money in the US, and 10-year money? What's it telling you? What does a break of 3% tell Jess Staley?
You know, we have strong economic growth globally. That's been translated into very robust equity markets. What we've been saying for the last number of months is I think we now have to sort of intersect that strong economic growth with a monetary policy which is more normalized. And getting interest rates back to the levels that we're seeing today, particularly the 10-year north of 3%, is evidence that the bond market, at least, believes that monetary policy will get to a more normalized level, reflecting the economic growth that we have. It's always challenging for markets when you have an adjustment or a reversal that we currently see in the bond market. But we think that this is ultimately very healthy to get interest rates back to more normalized level. It'll be interesting to see the impact on the dollar. But obviously, we follow the markets. We follow the markets on Bloomberg, and we think the activity that we've seen in the last couple of months around interest rates is actually quite positive.
So it's quite positive, and a bit of volatility helps, perhaps. So when we look at the second quarter, when we look at the quarter we're in, Jez, and we compare it to the quarter you just reported, will it be tougher to get to what you've reported in the previous quarter because of perhaps lower volatility? Of course, February gave some opportunities to certain parts of your business.
You know, we had a very good first quarter. We're going to spend the next couple of days describing what happened to us in the first quarter, and we'll leave the second quarter for the second quarter to end.
Jess, she's trying to get you. She's trying to get you to make one of those forward-looking statements. Look,
there you go.
Let's talk about the. Let's talk. Well, you know what? We got to try. We have to try on this program. Let's talk about the UK. Carney seems to be stepping back in rhetoric in terms of the desire to go ahead full throttle with rate hikes. How strong is the UK business for you, Jess? How strong are we? How strong is Anna? How strong is the High Street? How strong is UK PLC?
You know, I think everyone has an eye on the economic impact of the uncertainty that arises because of the Brexit negotiations. That being said, I think the UK economy has done quite well over the last couple of years. We look at the impairment rates in our unsecured consumer credit portfolio, and they seem to be holding up quite well. We look at the credit quality of our corporate book, and that seems to be in reasonably good shape. Spending is in reasonably good shape. So whilst there are some signs, whether it's consumer confidence, whether it's certain spending around the retail sector, there's some things that give us a little bit of concern, and we want to be prudent in how we manage our risk in the UK. But we're still totally open for business. We think there are a lot of positive things going on in the United Kingdom right now. So we're very constructive still, but it's a tough call as you come out of this period of monetary easing that the United States is going through and now the UK is going through. And I think the market generally believes that there will be a base rate rise either in May or June. But it's going to be an interesting call by the Bank of England and by Governor Carney.
So we'll watch that with interest, Jez. You recently, of course, in terms of UK regulation and UK authorities, you've recently received news from the FCA, from the PRA, around the uncovering of a whistleblower. You know the story well, of course. What's your initial reaction to what we've heard there? Were you relieved at the extent of their verdict or disappointed?
No, I think the FCA and the PRA did a thorough and exhaustive investigation around the anonymous letters, and we accept where they have come out. And now, it's to stay focused on running the bank as we have over the last year, and that's what I'm going to continue to do.